What's going on, everybody? Welcome back to yet another video. So in today's video, I'm going to be giving you guys an introduction to futures trading. Futures trading is something that a lot of people are currently looking into. So I figured I would make this video and break it down from the very basics. And then if you guys do want more futures videos in the near future, make sure to comment down below, like the video. Also, while you're at it, make sure to click that subscribe as well as clicking that bell icon. It would mean the absolute world to me. But let's hop right into it. So what is futures? Futures are a derivative financial contract that obligate parties to buy or sell an asset by a predetermined future date and price. The buyer must purchase or the seller must sell the underlying asset at the set price, regardless of the current market price at the expiration date. So a lot of people who are currently looking into futures are people who have traded options in the past. With options, when the expiration date comes around, you have a choice if you want to execute your contract if it's in the money. The futures, you are obligated to execute your contract. So again, keyword obligated. But most of the time in futures, we're not trading contracts. Can trade the contracts. I personally don't. I know a lot of people that also don't. But remember, futures are an obligation. Underlying assets include physical commodities and financial instruments. Futures contracts detail the quantity of the underlying asset and are standardized to facilitate trading on a futures exchange. Futures can be used for hedging or trade speculation. So a good example of this is big oil companies. They have people who end up hedging their current oil inventories just in case something were to happen in the oil market or even the corn market, so on and so forth. Now, what is futures part 2? Traders and investors use the term futures in reference to the overall asset class. However, there are many types of futures contracts available for trading, including commodity futures with underlying commodities such as crude oil, natural gas, corn, wheat. You can even trade precious metals like gold and silver. You can also trade stock index futures, which is ideally what everybody's looking into. So like the S&P 500 futures or the NASDAQ futures. You can also trade the Dow Jones futures and Russell 2000 futures. You can also trade the futures on currencies, so like the Euro futures or the Britain pound futures. There's so many different futures that you can trade, and you can even trade bonds. You could trade interest rates, and the list goes on and on. So there's so many different things that you can trade in the futures market. While at the same time in the option market, we're pretty limited on what we can trade. We can trade Apple, we can trade AMD. Sure, we can trade a corn ETF, but it's much better to just trade the corn futures. So there are plenty of different asset classes that you can trade futures, but the main futures I will be explaining and the most popular futures are the S&P futures, the micro S&P futures, NASDAQ futures, and the micro NASDAQ futures. So in the S&P 500, the S&P futures, 1 point is going to equal $50. So let's just say that the S&P futures are trading at 3,900. You buy one futures contract. If it goes up to 39.01, you're going to make $50. If it goes up to 39.02, you're going to make $100. So this makes it very easy to understand your risk reward. If you're willing to make 10 points, well, you're going to make $500 if your 10 points is hit. If you're willing to only risk 5 points, well, you're willing to risk around negative $250. So this whole point system, it makes it very easy to understand your risk reward. Now going over to the micro S&P futures, 1 point equals $5. So the micro, this is better for small accounts or people who just started trading futures. I started off trading the micros. That way I didn't end up blowing an account because I didn't know what I was doing at first. If this goes up 1 point, again, from 3,900 to 39.01, you're going to make $5. If it goes up $2, you're going to make 10. So on and so forth. If it goes down negative 10 points, you're going to lose $50. So every point is going to equal $5 on the micros, and every single point on the actual futures are going to equal 50. Now going over to the NASDAQ futures, 1 point is going to equal $20. So if the NASDAQ futures are trading at 12,000 and you go short one NASDAQ future and it goes down 10 points, you're going to make $200. If it goes up $10, you're going to lose $200. So again, very easy to understand your risk reward. And then the micro NASDAQ futures, 1 point is going to equal $2. And then here's all of that written out just in an easier way for you guys to read. Now, the difference between options and futures. Options have Greeks, futures do not. So in the option market, we have delta, gamma, theta, vega, implied volatility, and so many other things that contribute to one, how much does a contract cost? And how does the contract move in your favor? In the options market, you could buy a contract, you could buy a call, the stock goes up and you still lose money. I had an option trade on CLR. It was a swing trade. They got buyout news, CLR gapped up, and my contracts went to zero, even though I had calls and this thing gapped up significantly. That doesn't happen in the futures market. Again, we're profiting every point that the future goes in our favor, or we're losing every point that it goes against us. Options experience higher volatility than futures. A stock could go in your favor and you still lose money like we just discussed. And then in my personal opinion, price action is so much cleaner in the futures. So I've always said that Forex has very clean price action. That's why I really like the swing trade Forex. If you were to compare the price action in Forex to futures, very similar. In the options market or just the stock market in general, I would say you have to do a lot more analysis to understand where the underlying asset is going. Futures, it's pretty straightforward in my opinion. So if you're somebody who is looking to start trading futures, there's so many different brokers that you can use. If you have the capital, you can use ThinkorSwim, Interactive Brokers, Tastyworks, and the list just goes on and on and on. I personally use my account on ThinkorSwim, but I do know a lot of people that use funded accounts. So a broker that you can use for a funded account is NinjaTrader. I'm not affiliated with them whatsoever. That was just the funded account that I used at the beginning. So that's the only one that I'm familiar with. Again, I'm sure there's so many different brokers that you can use, but as far as funded accounts, the only one I know of is NinjaTrader. So if you guys want to check it out, just go on over to ninjatrader.com, I think is their website, and you have so many different accounts that you can choose from, give you money to trade with, and it does have some requirements. Again, not affiliated. So again, if you would like more futures videos, make sure to like the video, comment down below letting me know, and I look forward to making many, many, many more videos on the futures in the future. But as always, everybody have an amazing rest of your day, and I'll see you guys in the next video.